Hi everyone, welcome back to my channel, and today we will calculate 10 technical indicators with Python. So let us begin. So we will calculate 10 technical indicators, and what we'll do is we'll request historical data from the MetaTrader 5 library, and then we will use pandas to process the data and then calculate the technical indicators. And we will also visualize our technical indicators using the plotly library. Here are the 10 indicators that we will be calculating. So we will start with simple ones, and then gradually we will look into more complex and advanced indicators. So number one is the simple moving average. Then number two with the exponential moving average. Then we will calculate the average true range, the RSI, the high low of previous session, the standard deviation, Bollinger Bands, moving average convergence divergence or MACD, SMA Crossover, and then at last the Stochastic Oscillator. So here are the libraries. So we will import MetaTrader 5, Pandas, Plotly, and IPython display to display the data. And first, to calculate the indicators, we of course need historical data. And to get the data, we will use the MetaTrader 5 library, and we connect to MetaTrader 5 using empty5.initialize. You can also optionally use login credentials of your trading account if you have your own MT5 account with a brokerage. If you do not have a trading account to request the historical data, you can click on my affiliate link and request a live or demo account at IC Markets. So to request the historical data, we will request on the EURUSD daily time frame starting from 2021. So I've also imported the date time to specify the date time range for which I want to request the data. So here the symbol is EURUSD. Set the time frame to time frame D1, which is the daily time frame. And here are the date time ranges. So we start from 2021, January 1st, until today, which is November 18th, 2021. Using MT5 copy rates range, we then pass in these parameters, and then we get the OHLC data in an array, which is this array here. Next thing is we will then pass this array into pandas data frame. So df is equal to pd.dataframe passing the OHLC array, and the resulting data frame looks something like this. Then we want to drop some columns. So for this video, we will only need time, open, high, low, close. So these columns can be dropped. And we do that by simply specifying the column names that we want to keep. And the resulting data frame looks something like this. Lastly, we also want to convert the time column to date time. So we see that here we have Unix timestamps, and to convert it to date time, we use pandas.toDateTime. Here we pass in a time column and specify the unit to seconds. And then the resulting data frame looks something like this. And this is what we will be working with today to calculate the indicators. To show you what the data looks like, we can also visualize the close prices of this data frame by using Plotly Express. So we do fig is equal to px line, and here on the x-axis we specify the time, and here on the y-axis we add the close column. I set the title to EURUSD close prices, and by using display fig we now see this chart with EURUSD close prices. So let's now move to the first indicator, which is the simple moving average, or the SMA. And the simple moving average is probably one of the most popular indicators. It is used to determine trends. Obviously, first something like if price is above the SMA, it's bullish. If price is below the SMA, it's bearish. And to calculate the SMA, it's very easy. So let's calculate the SMA for a period 10. So here, I set SMA period is equal to 10, which means that we will use the last 10 close prices. And to calculate the SMA of period 10, we take the close prices, Then we specify the window, and the window is 10, so the rolling takes the 10 last prices, and by using mean, we take the average, and that is the SMA period 10. And so now, if you look at the data frame, we now have time, close, and SMA here. And what you can also see is that the first 10 rows don't have any SMA values, because to get the SMA, you need at least 10 of these inputs. So to plot the SMA, we can use px.line. Here on X, we again specify time, and on the Y-axis, we add the close and the SMA 10 data. And the figure looks something like this. So here the blue line represents the close prices, and the red line represents the SMA. The EMA is very similar to the SMA, but it reacts to recent price changes much faster. So in this example, we will calculate the EMA of period 10. So here we specify EMA period is equal to 10. And to calculate the EMA, instead of rolling, we use EWM pandas. And this is basically a method to get the exponential weighted mean. And to specify the period or the window, we add the parameter span and add the EM period. And the minimum values we want for a period is again 10 values. And after that, we take the mean, which is then the average. So again, I will show you what the indicator looks like on the chart. So this looks very similar to the SMA. And here in this section here, I will show you, or we will compare how the SMA behaves compared to the EMA. So here's the comparison of the close prices, SMA and EMA. The red line is the SMA and the green line is the EMA. So for example, here in this period, we see that the green line here, which is the EMA, reacted to this price drop much quicker than the SMA. So some traders who want to try to identify a change in trend early, or simply want to have a faster signal, they might want to use the EMA instead of the SMA. So now we will go to the average true range, and the average true range, or ATR, is a volatility indicator, and it helps you to assess risk on the asset or generally the volatility. Changes in volatility may also imply that the market is changing trend, popularity, and there are also many other factors. And a range with the ATR indicator is defined by taking the high value minus the low value for a specific period. And the ATR is simply just the average for this entire period. So here, here's an example how you can use the ATR. So let's say we have a strong bull run, an uptrend, and the ATR is very high. But then the ATR decreases. That means that prices are starting to slow down, and this change in behavior may indicate a stop to the trend and a beginning of a retracement phase. So in this example, we'll calculate the average true range with the period 14. So here I set the ATR period to 14. And again, the range is simply by taking the high of our candle minus the low of the candle, which is the range of the candle. And to get the ATR, we just take the average range of all candles for this period. So for the last 14 candles, we take the average range by using dot rolling, adding ATR period, and calculating average using mean. So this is what it looks like. And when we plot the ATR indicator, this is what it is. So we see that the Euro USD was much more volatile in March, and then in September the volatility decreased a lot, and now we are starting to see some volatility again on the Euro USD. So let's compare it with the charts here. So as we can see here, we can see very sharp drops, which confirms that the ATR was high during this period. Here during this period, we see that the ranges were quite narrow, and here we, compared to this downfall here, we have a very slow rise. So this is the ATR indicator, and now let's go to the relative strength index, or the RSI, and this indicator is often used as a way to determine overbought and oversold prices. So when the RSI is high, you want to sell, and when RSI is low, you want to buy. So it is also possible to use the RSI as a trend indicator. So in some cases, when the RSI is high, it also means that buyers are very strong, which might also be an indication of a strong uptrend. And it always depends on the circumstance and the situation. And it is important, like, to distinguish whether you should go mean revert or whether you should follow the trend. But this is up to that video. Let's calculate the RSI with pandas, and we set the period to 14. So here RSI period is set to 14, and the mathematics behind RSI are a little bit more complicated, but let me try to explain it very simply. So the RSI is taking the average gain over a certain period, and gain is defined as if there is a bullish candle, so if the close price is greater than the open price, then we have a gain of X, and if the price is bearish, that means that the close is below the open, then we set the gain to 0 because we've gained nothing if the price dropped. The loss works in a similar way, but if there is a loss, then we'll apply the same logic, but with minus X. So let's say we lost 10 pips. So this means that that's a loss of 10 pips. So that's why we're using this minus sign here. And if we're gaining, then the loss is 0 because we are not losing anything. And by taking the exponential weighted average, gain or loss, which is EMA gain, EMA loss, this is necessary to calculate RSI. So let's take the gain and calculate the EMA of this. And we are using the same logic as calculating the EMA in example 2. And by taking the EMA of the gain and the EMA of the loss, we can get something that's called the relative strength. And the relative strength is just a ratio between the exponential average of gain divided by the EMA of the loss. And then to convert this to the RSI, there is this formula, and that is 100 minus 100 divided the relative strength plus 1. So this is the definition of the RSI using the relative strength. And to show you what it looks like, we can also plot the RSI using the time column and the RSI, and this is what it looks like. So here is the RSI indicator, and we see that when price is below the level 30, it is oversold, and if it's above 70, it is overbought. And for many traders, this is an indicator for a mean reversion. So I've also added these lines. So 70-30 are commonly used as levels to define oversold and overbought, and these are specified here. And to add these horizontal lines to our figure, we can use add H line, which stands for add horizontal line, and then here in this Y parameter, we just add the overbought and oversold level, which are these horizontal lines here. Okay, so this is the RSI indicator. So let's go to the next one, which is the high and low of the previous session. This one is very easy. So we're basically just trying to find the yesterday's high and yesterday's low. And this can be a good indicator if you're, for example, trading intraday. So if you know that you are inside yesterday's range or session, that means that you might want to buy at the low and sell at the high, which implies that the market is ranging. Otherwise, if you break yesterday's session, for example, that might indicate a trending market. So you might want to enter breakout. So if it like breaches the yesterday's high, you might want to buy after that breakout. So to calculate the yesterday's or the previous high low, we can use shift, and shift simply takes the previous values of the high and then shift it down by this amount, which is in this case 1. So let me show you what it looks like. So here we have a data frame with close and high, and here's the low. And the previous high has been shifted by 1. That means that this value here has been shifted by 1 here. And this value here has been shifted by 1 here. And the same applies for the low prices. So the low current here, and then the previous low has been shifted by 1 down. That means that we have the data from the previous rows. And here I've plotted the previous high low and the current close onto this chart, so we can clearly see where the previous high low was. And for example, here we are inside the range, and here, for example, the close price broke above the yesterday's range. So let's go to the next indicator, which is the standard deviation. And the standard deviation is a measure of variance. What it means is how much it is changing from the normal. So if the standard deviation is high, it basically means that the markets are more volatile. And in this example, we will calculate the standard deviation with period 20. So here I set the deviation period to 20. And in pandas, there is a very easy way to calculate standard deviation. So for the 20 recent close prices, I can use .std, which will return the standard deviation. So here is the standard deviation. So we see that here the standard deviation is high, and here it is very low. And if you look at the Euro USD prices, we can see that here the standard deviation is very high because of this big spike here, which is indicating that the markets are moving very rapidly. On the other hand, we have a standard deviation that is very low here, and we can see that here the market was not moving at all. So it helps us to determine, for example, when markets are ranging and when markets are very volatile. So now that we've calculated the standard deviation, we can now go to Bollinger Bands, because Bollinger Bands are basically made of standard deviations. And the Bollinger Bands, they consist of a simple moving average, usually period 20, a lower band and an upper band. And the lower band is usually 2 standard deviations away from the moving average, and the upper band is also 2 standard deviations away from the upper band, but on the upper side. So Bollinger Bands, again, they are used for mean reversion strategies, but if there is a breakout of a Bollinger Band, they can also be used for breakout strategies. So here I set the period of my SMA to 20. And to calculate the SMA, that is very simple. This is already done example 1. So we take rolling the SMA period and calculate the mean. And as already explained, the upper band is 2 standard deviations above the simple moving average. So we do plus 2 times the standard deviation. And the standard deviation was calculated in the previous example here by using STD. So all we have to do is just multiply it by 2, and now we have 2 standard deviations above the SMA. And for the lower band, we just have to subtract 2 standard deviations, and then we get the lower band. So here we have the resulting data frame with the SMA upper band, lower band. And to plot the Bollinger Bands, we just take all these columns here, the close, the SMA, the upper band, the lower band, and this is the resulting chart. So here the red line is the simple moving average, the green line is the upper band, and the purple line here is the lower band. So this is how you plot or calculate the Bollinger Bands. So now let's go to moving average, convergence, divergence, or MACD. And the MACD, let me just correct this real quick, is a trend indicator which is trying to predict reversals at an early stage. And it is done by calculating the fast EMA with period 20 and a slow EMA with period 26. And by looking at the relationship between those two EMAs, the MACD is then trying to predict when trends are slowing down, when trends are increasing, and when they are trying to reverse. And the MACD, by definition, is just the difference by subtracting the 26 period EMA minus the 12 period EMA, and that is the MACD. And oftentimes with the MACD, there is something called the signal line, and the signal line is calculated using the EMA of the MACD using period 9, and I will later explain how the signal line can be used or how it is usually used with the MACD indicator. So to calculate the EMA, we've done that in example 2. So we just set the fast EMA period to 12 and the slow EMA period to 26. So here, this is the calculation of the EMA. So this is nothing new for us now. And the MACD is the difference. So we take EMA 26 and subtract EMA 12 from that. And that is the MACD value. Then we will calculate the signal, the MACD signal, and we are taking the MACD and calculating the exponential moving average with the period 9. So it is again the same as here. And let me show you the resulting data. So here, the blue line is the MACD and the red line is the MACD signal. And conventionally, how the MACD is used is whenever the red line crosses the blue line, it is implying a reversal in trend. So if the MACD or this signal line crosses the blue line here, it is indicating a shift from uptrend to a downtrend, and vice versa. If it's crossing the blue line here at the bottom, it is then indicating a reversal from a downtrend to an uptrend. So this was the MACD, and let's now go to the SMA crossover. The SMA crossover is somewhat similar to the MACD, but it is using a much easier concept. And what we have here is simply a fast simple moving average and a slow simple moving average. And whenever these moving averages cross, they also indicate a change in trend. So the SMA 10 is calculated using the mean values as like in example 1. But we also want to find the crossovers in this example, and for that we want to know the previous SMA value. So we use shift to do that. And here we calculate SMA 20, the slow simple moving average. And here I wrote a function to find an SMA cross. And basically a bullish crossover is defined when the fast simple moving average is above the slow simple moving average, but the previous simple moving average value was below, which means is that it is a crossover. And for a bearish crossover, it is the other way around. So if any of these conditions is true, then this function will return true, which means that there was a crossover. And then we created a crossover column and we applied the function. So we use df.apply, we pass in the function, and here specifying axis 1, it means that we apply this function on each row. So then we can plot the moving averages, which looks something like this. And here we have the close prices, which is the blue line, the SMA 10, which is the red line, and SMA 20, which is the green line. And we can, for example, see that when the fast SMA, the red line, crossed above the slow SMA, the green line, here we can see a nice uptrend going up. So this indicator here successfully showed us a reversing trend. Of course, these crossovers are lagging, but we can talk about it in another video. But basically, they can easily describe a change in trend based on these crossovers. Also, I've added these vertical lines here to show you where these crossovers are. And I've done that by, after creating our figure object with the close SMA 10, SMA 20, I just iterated through the rows where the crossover was true, and then I added a vertical line and just specifying the time for the X parameter, which then created these vertical lines here for each crossover that happened during this period. And now we are at the last technical indicator, which is the stochastic oscillator. And the stochastic oscillator is similar to the RSI, but it is using high and low values for the calculation. So in this example, we will calculate the stochastic oscillator with the period 14, which is specified here. And to get the stochastic oscillator, we want to know the minimum low for this 14 period and the maximum high. So after calculating the minimum low and maximum high for the period 14, the stochastic oscillator is defined using this formula. So we take the current close price minus the 14 period low, and we divide this entire value here by the 14 period high minus the 14 period low. And by using this relation here, we can then plot the stochastic oscillator, which will create this very nice oscillating curve that goes up and down. And when the oscillator is low, we can consider it as oversold, and when it's high, it's overbought. So it has similar characteristics as the RSI, but there are also like some slight differences, which we can, for example, compare also in future videos. So these are 10 technical indicators that you can calculate with Python. I hope that you've enjoyed this video. Also, I will host my Jupyter Notebook on my website. So if you want to download it and test the code for yourself, you can just go to my website by following the links in the descriptions. You can also let me know what's your favorite indicator, and if you have an indicator that I haven't mentioned, you can also let me know in the comments, and I might make another video on some other indicators. So thank you very much for watching. Please consider liking and subscribing, and I'll be back very soon. See ya. Bye.